Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points.
In this tutorial, I will be going in detail, step by step, through the source code of the simplest trading algorithm that I have, which is the debaser EA. I will be showing you the principle of the strategy. Then I will be showing you the entire code. We will be going through the entire code of the program. And then we will be creating this backtest. As you can see, it has a very nice backtesting performance, bringing the account all the way up to more than 500,000. And I will be showing you how strategies can even be extremely simple. Automated trading strategies can be even extremely simple. The important thing is that they have some solid fundamental reasons above which they're essentially built. So without further ado, let's get right into it and make sure that you stick to the end of the video so you can really grasp all the concepts.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Okay, so let's start from the strategy idea. Now, the debaser EA essentially trades on the S&P 500 or any other big index. Like the S&P 500 is usually the benchmark when it comes to indexes, so that is why it trades on the S&P 500. It is developed for the S&P 500, but this EA can pretty much run on anything that has a fundamental reason for which it continues to grow. Now, why the name debaser? Well, to explain this, it's easier if we switch to a logarithmic chart, a scale actually. And what we can see here is that very clearly the S&P 500 index continues to grow. Now, pretty much these are the 500 biggest companies in the world, which are the 500 biggest companies in the US, so pretty much in the world, we can say. And obviously, there is the fundamental reason that economies tend to continue to grow, so the index is supposed to continue to grow, right? But there is also another thing, which is currency debasement. Now, that is essentially government printing money. They don't really print money. It's a bit more complex than that, but they essentially, to put it simply, increase the money supply. And by doing this, asset prices tend to rise, right? And especially the 500 biggest companies in the US, so arguably in the world, are supposed to continue to appreciate over time, both for economic growth, but anyway, just from currency debasement, they're supposed to continue to increase. Asset prices are supposed to continue to increase. So if we take here the S&P 500, we can see that obviously, it's not a surprise that it continues to grow over time. Now, what we can do, and what I have done essentially, is develop a strategy on this basic concept. So the first concept is super large indexes like the S&P 500, which is, I would say, the benchmark when it comes to indexes, are supposed to continue to grow from economic growth and currency debasement in the long term. The second idea upon which I have developed the debaser EA is the fact that usually, if we look at the historical trading performance day to day, what has happened when the S&P 500 has lost more than 1% during that day? We can see, for example, here, if it loses 1%, it usually continues to lose even more for the rest of the day. Okay, while if it doesn't lose 1% of value in that specific day, then usually continues to increase throughout the day. So based on these two very simple principles, the fact that the market is supposed to continue to grow here on the S&P 500, either from economic growth or currency debasement or both, and the fact that historically, every time that the market, in most occasions, every time that the market has lost more than 1% per day, usually it then kept falling throughout the day and had a bearish trading day. Based on these two things, I have built this expert advisor, which is incredibly simple. And that is why I want to share it, because it's very, very simple. It's not like my other more complex trading algorithms. This one is extremely simple, so I can easily explain it to you and explain all the code and reveal it very easily. So these are the two concepts. Now let's switch to the actual code. Now I have here my meta editor open. Now if you're not familiar with how the source code of expert advisors work, it works essentially just a brief overview. Here you can pretty much put the inputs, global variables. You have here on init, this is the part of code, kind of like a script that gets executed only when the expert advisor is initialized. Here on the dinit function, this is essentially the part where when you close when the EA stops trading and essentially you remove the EA. So on the initiation, this part gets executed. Then you have the onTick function. Now this part of code is the part that actually is run through every time that there is a new tick on the market. So every time there's a new tick, so the price changes. Like for example, in the S&P 500 case, like when it switches from 5,917.12 to 0.13, that would be essentially when the entire code would again be executed, because obviously, when you're running a trading algorithm, you want every time that there is even a minimal change in price to recheck all the conditions and see if the conditions are satisfied. And if they are satisfied, then maybe some other action needs to be taken by your trading robot. Now, I will obviously now go in detail through all the code. I'm just giving you the general explanation of how it works, just for people that have no idea, so they can start getting an idea and they can actually follow through the entire video. Now here below, so outside of the onTick function, I obviously have my custom functions. In this case, again, it's incredibly simple. I simply have a custom function which closes all trades, and we will obviously go through it. A custom function which checks if there already is in open order, and the lot size calculation. So simply the calculation for the risk management. Also here, incredibly simple. I will now go through everything. So let's start obviously step by step here. These are just the properties and the copyright of the code. So the first thing is the magic number doesn't really matter. Like this is simply used by the algorithm to in the MetaTrader to understand which orders are opened by which expert advisor. And this is the risk per trade. Now, obviously, this could easily be an input. I simply have it here directly from the code because this is just for the example. So this expert advisor, the first thing I've done is set that it trades with a 1% risk per trade. So from here, I can control this variable, which then we will see in the custom function. Obviously, it gets checked in the custom function to actually calculate the lot size. No action on initiation, no action on the initiation. Let's go and check the actual code of the strategy. So what does the algorithm do based on the two main ideas that we have seen from the actual strategy idea itself on the chart, which I have just shown you? Now, what it simply does is, first of all, it will check if the hour is equal to 3. So if it is 3 in the morning, and if it is 3 in the morning and there are no open orders, so this function here, which is check if open orders, if you obviously have here the magic number as an input for the custom function, this obviously gives the possibility for this custom function, which I will now show you, to check only orders with that magic number, so that it only checks orders that it has opened itself. Because when you have an account, when you're running a portfolio of algorithms and trading strategies on your account, you obviously want to make sure that each expert advisor is checking only its specific orders, because if it's checking also other orders, then it will completely mess up the strategies, right? So first of all, what it's doing is checking if it is 3 in the morning and checking if there already is in open order. The exclamation mark in MQL4 is simply the negative. So if there is not, if this, which is a Boolean, which returns a Boolean, so either it is true or it is false. In this case, it checks if it is false because it has the exclamation mark in front of it. Let's go and check out this custom function. Now, what does it do? It's very, very simple. It will simply loop through the total orders, which obviously now once it has looped through the open orders, it will check if there is an open order, so mode trade. So it will only check the open orders, not already closed orders, because it doesn't really matter. And if there is an order which has that magic number and is obviously on the same symbol, this is not really necessary unless you're trading with a multiple expert advisor, which is with the same magic number on multiple pairs, but this is just a redundant check. If the order type is buy or sell, then it's supposed to return true. So if this returns true, obviously this will not hold, because at this point, this will be true and not false. So it's only going to check if this is false. And that is exactly what we need, right? Because checking if that is false, what it will do is, you can see here that if this is not satisfied, so if there isn't an order, which is a buy or a sell order, then it will return false, which is exactly what we're checking here. We want it, if it returns false, to proceed with doing this other action, which is simply sending an order. Again, extremely simple expert advisor. So we'll calculate the stop loss, and it will simply check 1% distance from the price level that we're currently at. And why 1%? Well, because that was one of the two fundamental principles of the strategy, that the market is supposed to go up, and that when the market loses more than 1% in that specific day, it then tends to continue the downtrend in that specific day. So that is essentially what it does here. So actually, I just noticed that I was doing some more testing, and I had this with a 5. That obviously this would mean that there is a stop loss at a 0.5% distance from the price. So I just corrected it here to 0.99. So this will calculate the stop loss being precisely 1% from the current market price. I was testing at also 0.5%. That is why I had a 0.995 instead of 0.99. Now, when it comes to the point, simply here it calculates the point distance. So then it can go and calculate completely automatically the risk per trade, which is a custom function, which takes as points also as the input, so it can calculate it more precisely, and the maximum risk per trade percentage per trade, which in this case is 1%. We have already defined it here. Now, how does this custom function work? Well, it will simply return the lot size, and the lot size that it returns is based on, again, as we have said, the stop loss in points and the risk per trade percentage that we have already defined before as the variable above. Now, what it does here simply initializes the variable, then it will essentially adjust the tick value, and then obviously it will not continue if the stop loss in points is 0 or the tick value is 0, which sometimes can happen if there is, for example, an issue with the data or other stuff like that. So this is just to prevent errors. This is the lot size calculation value, and then there are some adjustments, because obviously there is also for brokers, for example, a maximum lot size on MT4. Most of the times the maximum lot size is 200. So what this will do here is check, using the market info function, for that symbol, what is the minimum lot size, what is the maximum lot size, and once it has that, if the lot size is above or below the minimum or maximum, it will use the adjust lot size to step. Now the step depends from the symbol. For example, indexes usually it have a lot step which is of 1 lot. Forex pairs usually have a lot step which is 0.01 lots. So there is different degrees of granularity to the adjustment that you can make to the actual lot size. So this is the adjust lot size to step. Simply adjusts the lot size. This is part of the function, adjusts the lot size to the minimum or maximum lot size that there is available for that specific symbol in your broker. Now, at this point, the returned lot size gives the lot size at that entry level, okay, at that specific entry level, at which, if the market goes against this and actually hits that specific stop loss, the loss is supposed to be of the percentage specified here, or better said, specified in the variable. That this variable has already been defined here. So this will essentially give us the lot size, which then can be used to essentially send the buy order. So here it sends the buy order with that magic number. And this is simply to get an alert if there is some kind of error with the order send. This is just for double checking in the case there are some kind of errors. So it's very, very simple. It will open the order at 3 a.m. in the morning, and it will then proceed if the hour is 21, so if it is 9 p.m. essentially, to close that trade using the close all trades custom function with that magic number, which again, as we have already seen, is very similar to the check if open order. So it will essentially loop through the open trades, check that is that magic number, check. This is just a custom functions which I just copy and paste because I use them so often. Obviously, in this case, since we're only using buy, we could simply not check for sell, but it's just custom functions which I copy and paste because I use them over and over again. So then obviously if there is a problem with closing the orders, we want to get some kind of statement so we know what kind of error there is. But again, this is just for checking in case of error. So as you can see, it's extremely simple code. Checks if it is 3 in the morning. If it is 3 in the morning, calculates the stop loss, checks the distance, sees what kind of risk per trade is supposed to use, takes that, calculates the lot size, and executes the buy order. Then at 9 p.m. in the night, in the evening, it simply closes all trades. So extremely simple expert advisor based on that concept, right? So what we can do now is essentially compile it. As we can see, we already got 0 errors. So we can now go and proceed with a backtest, essentially using these parameters. So let's take the last 10 years of data on the S&P 500 and let's perform a complete backtest. And what we should see here in the results is that in fact the expert advisor is opening and closing orders precisely is opening them at 3 a.m. and closing at 9. So we can see that is exactly what it is doing, right? We can also notice that it's essentially doing that every single day, which is exactly what it's supposed to do. And we can also see that in case of a stop loss, in this case, I simply started the test with 7,500 as an account balance. We can see that, in fact, it lost $75, which, since we have inserted 1% risk per trade, means that the 4 lot size is actually precise for that order, considering that obviously why is not precisely 75, is 75.6, or it will be slightly different. Well, the reason is very simple, because the lot step, in this case, from the custom function here, what kind of lot step it has for that symbol, it gets that, okay, the lot step is actually 1, because for indexes, most brokers will only allow 1 lot at a time. So obviously it cannot be super precise, but it can be precise enough because brokers do not allow for indexes at 0.01 increase, so on and so forth. So as you can see, this is extremely simple code. I'm just showing you because of that, because trading doesn't have to be super complicated. Simple concepts, simple strategies can be easily automated. And if they're based on solid concepts, it doesn't have to be extremely complicated, right? Now, I was testing this with a 0.5% distance. I also did other tests, 0.2. Sometimes it's a bit too little, sometimes a bit too much. I obviously won't reveal exactly what I am using for my personal trading, obviously, because everything you have to do your own test and your adjustments. But 5% distance, 1% distance, 0.75% distance, these are all optimizations which can also be optimized using the MT4 optimizer for your personal preference. So I hope you enjoyed this tutorial. It was very, very simple automated trading strategy with a very simple concept. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in the description. Here, you have the possibility to gain access to the most complete mentorship program ever. You have the possibility to gain access to all my courses, which will guide you from the basics to the most advanced topics like automated algorithmic trading using the MT4 language. Then you will also gain access to the trading station software with a Telegram notifications integration directly on your panel. You will also have the possibility to have one-on-one mentoring directly with me, as well as having access to the COT data software, which is the one that you see me use very often in my videos. And if you continue to scroll down on the website, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.